With further analysis on those market moves, I'm joined by Jacques Pretorius from Sinayo Securities. Jacques, happy Monday. Thank you for being with us today.
Thank you for taking me.
All right, Jacques, pretty busy week ahead of us. The first 5-day one that we've had here, I think, in a while. What are you watching for this week?
Okay, there's a few figures obviously coming out of the different markets. A few figures out of China, a few figures out of the US. And I think we are possibly in South Africa looking to the next rate increase. We are obviously a bit hawkish on that. I think there's a good chance that we'll have another rate increase. The US, on the other hand, I think they've still got one session left, another 25-point rate hike there. I think that sitting is on the 3rd of May. So, you know, to me, there's no huge catalyst right now, right, to drive equity markets much higher than they are at the moment. I think the US still looks expensive on a forward multiple of around about 17 times. And I haven't seen any drop off, right, in the estimate earnings, right, in that market. So that's something that still has to come into play. And obviously, with them having this very aggressive, right, interest rate rise over the last year, it's actually been the strongest rise in the last 30 years. It's going to have some impact, right, on the economic growth, perhaps not this year, but certainly possibly early next year. And the likelihood of a soft landing is questionable. I think it could be harder than that. It could possibly be a recession. And therefore, I think, you know, that the US equity market isn't pricing in everything. Now, it doesn't mean that it is going to be a crash. It could be a sideways move. But certainly, I do prefer other asset classes right now if I look at the equity market.
Very interesting. Third observation, Jacques, keen to find out from you, as we are expecting local CPI. Have markets priced anything in there? Are we expecting another decline, considering you know, load shedding really being in the thick of it in terms of South Africa's economy and costs, you know, throughout all sorts of value chains?
Yes, at this point, the market's looking for around about 6.9, so it's very flattish, so it's remaining quite high. And for that reason, I think the reason why we might be looking at another rate hike. Obviously, the push coming from the food inflation side, that doesn't look great. So food prices are on the up and holding up, putting a lot of pressure on our lower income people. So yes, that's the reason why I think there could be another 25 beeps, despite, you know, we've seen the last one of a 50-point rise. I think they'll be front-loaded, a bit more aggressive to try and get this inflation down.
I'm also keen to find out what you think would happen with fuel prices. We know that in March, we are expecting petrol to increase by R1.27. It's quite a bit, Jacques, and I'm wondering, you know, if that's maybe the trajectory we can expect, considering OPEC Plus's latest announcement, but also just a rand that is battling to gain some strength there, at least in the long term.
Yes, you know, obviously what I've done is I do have a model running on the rand for the long term. I think we're very close to being fairly priced, right, if I consider the inflation differential with America. I've got a fair value in the region of about 1750, 52 odd. So we are slightly above that. I do believe the rand's going to be in a range trading range, right, for the next foreseeable future. Probably in the upper end around about 1870. And I don't see it below, right, the 1650 odd levels, right, in the short term. Having said that, right, the dollar's been very strong for a long time. We've had a bull market in the dollar for virtually the last 10 years. And, you know, there's always in a crisis situation, people run towards the dollar. And they've had the full benefit now of a long cycle. I think the next move, right, in the dollar would be a slightly weaker bias. We are seeing the dollar, it's come back a bit from its highs against the euro and the pound, but I could see it possibly rolling over even further. And remember, the market's always forward-looking, and what we find when interest rate starts declining, which I expect to be more or less the middle of next year, so June 2024, we might see the first rate cut. The market will anticipate that, and I see a weaker dollar going forward. So, you know, that is a bit of a benefit, right, to South Africa in a sense. that the rand could actually hold this level for a while longer, and that will also be good for our inflation.
And then before I let you go, Jacques, I have to ask you about China. We're expecting Q1 GDP data coming out of there. It's very hard to gauge considering the fact that they are coming off the low base of a complete closure. I'm wondering what you're processing in terms of the expectation for this number.
Yes, I think the China GDP recovery is on the way. I think COVID will support it in the short term. It might not be as sustainable as we think, but obviously they've got a few other triggers they can pull. So, I think we could still see some stimulus come out of China. They've recently announced that they're going to have a metro rail development, which that's another $5 billion, right, of investment. So they're certainly pushing towards relaxing the regulatory environment for the tech stocks as well. I think they saw the damage that's done about a year ago. So I suspect, they'll be able to, we're not going to see the levels in China that we've seen 5 or 10 years ago of 5 to 10% growth. But at least, we'll see levels closer to the 5% again as the cycle accelerates. So yeah, I'm not negative on China, but not as bullish, as it could have been in the past.
All right, Jacques, let's talk about your stock pick for this week and why you decided to go with that one.
Okay, it's a slightly different call this time around. I want to invest in the Stratrix Govy, right? So that's an ETF. It actually invests in the all bond index in South Africa. And the reason why I'm thinking that is because I think I mentioned earlier that I don't see a big catalyst to drive the equity markets much higher. And that Govy yields you very close to 11% on a running yield. We've also seen our governor of the Reserve Bank targeting a much lower inflation target of about 4%. And what that would mean that interest rates will come off. So the likelihood of having a capital gain on your bond investment is quite good. So I'm targeting the Stratrix Govy for that specific reason. And I'm probably looking at between 15 and 20% growth over a year period.
Certainly sounds like a better place to put your coins at this time. Jacques, thank you so much for your time. A pleasure catching up with you and getting your insights. And that was your midday markets update with Sinayo's Jacques Pretorius.